Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Biomerica, Inc. quarterly report. Biomerica, Inc., market capitalization of $0 billion, is materially smaller than most of its industry peers of roughly $0 billion. Biomerica, Inc. trades at a lower price-to-book ratio of 1.55 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The company maintains a moderate leverage profile, with liabilities making up 31% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased, while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This also raised the question if that management is diluting shareholders to sustain the business. The share count has increased, while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. If the business does not improve its revenue and generate positive cash flow, the company will continue to struggle to cover its cost and interest expenses. This combination makes the investment case highly unfavorable unless earning issue is addressed. On top of the cash-burning business, shareholders are consistently diluted. I may be wrong, but I would suggest to stay away from such investment for now. Biomerica, Inc. offers a diverse range of businesses and services through its biomedical technology company. The company's primary focus is on developing, patenting, manufacturing, and marketing diagnostic and therapeutic products for the detection and treatment of various medical conditions and diseases worldwide. The company provides diagnostic test kits that analyze blood, urine, nasal or fecal specimens from patients to diagnose diseases, food intolerances, and other medical complications. These tests measure specific substances in the human body, such as bacteria, hormones, antibodies, antigens, and others, which may exist in extremely small concentrations. Biomerica's products are sold for treating gastrointestinal diseases and food intolerances, as well as various esoteric tests at physicians' offices, over-the-counter drugstores, and hospital/clinical laboratories. The company is also involved in the development of 2 specific diagnostic tests: InFoods IBS, which identifies patient-specific foods that alleviate irritable bowel syndrome symptoms using a simple blood sample, and HP Plus Detect, a H. pylori diagnostic test that indicates if a patient is infected with the Helicobacter pylori bacteria. Overall, Biomerica's businesses and services include developing and patenting diagnostic and therapeutic products, manufacturing and marketing diagnostic test kits, selling products for treating gastrointestinal diseases and food intolerances, providing esoteric tests at various locations, developing specific diagnostic tests, such as InFoods IBS and HP Plus Detect. The past year has been marked by several key developments that have contributed to Biomerica Inc.'s BMRA stable stock price. Despite some fluctuations, the company's stock price has not made a significant negative change, exceeding -3.57%. This stability can be attributed to a series of positive news events. One major milestone was the establishment of a national Medicare payment rate for Biomerica's InFoods IBS test by the Centers for Medicare and Medicaid Services, CMS. This reimbursement clarity and expanded patient access through the Medicare system have likely supported the stock or prevented a notable decline. Additionally, the company's strategic marketing services agreement with Henry Schein has instilled investor confidence, counteracting downward pressure. Biomerica has also made significant strides in expanding its global market access. Regulatory approvals from various countries, including Egypt and the United Arab Emirates, have opened new international markets for the company's products. These developments offer potential for revenue growth and offset concerns about performance in existing markets. Furthermore, Biomerica has launched an AI-backed digital companion tool to support personalized IBS therapy and improve patient outcomes. This innovative solution aims to enhance dietary compliance and treatment success for individuals using the InFoods IBS test. The appointment of a former LabCorp Diagnostics CEO to the company's board of directors has also been seen as a move to strengthen leadership and strategic direction. The company's fiscal 2026 first and second quarter financial results have shown positive aspects, with improved operating expenses and gross margins despite a decrease in net sales. A non-recurring tax credit led to a small net profit in Cone F 2026, helping to temper potentially negative reactions to overall sales declines. These events have likely provided a stabilizing effect on Biomerica's stock price, preventing any single event from causing a significant negative change exceeding -3.57% during the year. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On one hand, revenue growth can be attributed to the introduction of new products, such as DGT products and InFoods IBS product, which has expanded the company's offerings and appeal to a wider market. The expansion into new markets and regions, regulatory clearances, and partnerships with established companies like Henry Schein have also contributed to revenue growth. On the other hand, revenue decline can be attributed to slower than expected launch of key new products, cost-cutting measures initiated due to slower product launches, lower sales in certain markets, and reduced contract manufacturing billings. The decrease in clinical lab sales, over-the-counter sales, contract manufacturing billings, and physicians' office sales have also contributed to revenue decline. Furthermore, the company has identified international opportunities, new product launches, and sales through the 2024 ATM offering as potential drivers of future revenue growth. However, it is essential for the company to address its revenue decline drivers, including loss of funds, increase in accounts receivable, decrease in lease liabilities, and decrease in accrued compensation, to ensure sustained growth and stability. The company's operating cash flow has been a concern in recent periods. According to the financial statements, the 6 months ended November 30, 2025, and November 30, 2024, both showed negative operating cash flows of $1,259,000 and $2,135,000 respectively. This trend indicates that the company is not generating sufficient cash from its core operations to meet its expenses. The persistence of negative operating cash flow over 2 consecutive periods suggests a need for the management to reassess their financial strategies and explore ways to improve profitability and reduce costs. The company's debt level has undergone significant changes over the past few months. A review of the financial data reveals a decrease in current liabilities from $1,740,000 in May 2025 to $1,599,000 in November 2025. This reduction is also reflected in lease liabilities, which have decreased from $100,000 to zero during the same period. Furthermore, accounts payable and accrued expenses have also seen a decline, dropping from $285,000 to $154,000. These changes indicate that the company has made efforts to reduce its debt obligations. However, there is no clear indication that interest expenses have changed significantly, suggesting that any potential savings from reduced debt may not be immediately reflected in the company's financial statements. The recent summaries suggest a positive outlook for various segments and regions within the industry. Gastroenterology, GI physician groups have shown strong performance, indicating a successful strategy in this area. The U.S. market is also expected to thrive, with potential collaborations driving growth. While international markets are being explored for commercial opportunities, no specific data on their performance is available. Overall, there is no clear indication of poor performance in any region or segment. Management's primary focus is on developing patented, diagnostic-guided therapy products for gastrointestinal diseases. This goal is expected to drive continued growth through new distributors and product lines, as well as successful execution of strategic plans. The company aims to enhance health and well-being while reducing healthcare costs by developing advanced diagnostic and therapeutic products. To achieve this, management plans to expand its network of gastroenterology physician groups for the InFoods IBS product, explore distribution and partnership opportunities, and pursue Medicare reimbursement. Securing additional financing and achieving profitable operations are crucial for the company's future viability. Management emphasizes the importance of successful execution of strategic plans, securing additional financing, and achieving profitable operations to ensure the company's long-term success. Concerns about inventory buildup and supply chain disruption are evident in the data. The company's inventory reserve has seen a significant increase, with inventories rising by 70,000 units in 2024. This is further supported by the fact that raw materials inventory increased by $61,000 between May and November. However, there was also a notable decrease in inventories of $585,000 on page 22. The potential for supply chain disruption is also a concern, as logistical constraints could impact material and component availability in manufacturing processes. This could have far-reaching consequences for the company's operations and ability to meet demand. Overall, these issues highlight the need for careful management and planning to mitigate any potential risks. So that concludes the financial summary for Biomerica, Inc. Feel free to comment below, and I will be happy to answer them when possible.